from Agora Financial is down there. Alan, tell me a little bit about today, right? Let's start there. VIX coming in. You were sounding a little bullish last week. Are you impressed by the move in volatility?
Oh, very much so. Optimism wins. So if you can feel it, feel the calmness in the VIX this week. We're at 17 and change.
That's what they said.
We're back down to the August lows.
On Wednesday, and then we fell apart right after the big pop.
So Thursday was a significant day in the way the market tested and rejected those S&P lows, and then we bounced since that time. That's how a bottom gets put in. Where if we can get about 29.25 in the S&P, that's the halfway point of this drop from the top, and every time in history we've gotten above that 50% retracement, we've made new highs. Looking at this VIX, you've seen a series of lower highs, and you've seen a series of higher lows in the S&P. That's how this move has worked out over the last 10 years. You get those explosions, but they get beaten right back down, and that's what's happened once again.
Yeah. All right. So, Alan, when it drops, though, when we get to, say, your historical average of like 16 and a half VIX, it gets a little tougher, right? At that point, will you be looking for potential rocky waters if we're around, the highs of 29.40 on the intraday for S&Ps, or are you only going to get nervous when we get back to the all-time high?
I'm still very bullish. Now, let's remember the VIX did not take out its $10 low from last August, even though the S&P, made its highs.
For sure.
Let's talk about that. 3 weeks ago Friday, the market made all-time forever highs, and people have come completely unglued. Obviously we live in uncertain times, and that's added to this component. And yeah, the VIX is going to remain elevated because there's a chance that anything could happen any day. This is not a normal marketplace. It's not a free trading marketplace like I had in the last 25 years. Things have changed, but that doesn't mean there's not money to be made. And coming in today, we were less than 5% away from the all-time highs. So I still remain positive. I'm not trying to be the smart guy. I'm just not trying to be the dumb guy saying that the top is in.
Never, Alan. That's never you. All right, so let's talk some trading, Mr. Nuckman. You're looking at FireEye, okay? Because this was a favorite for a while in the security space. It's got its tentacles in everything that investors seem to like, but yet it's been off post-earnings, down to $13.
Exactly.
Are you coming in and trying to buy a dip on this thing?
Absolutely. This is a distressed and downtrodden stock. This stock is down 20% in 2019 compared to the tech sector, up 20%. So if you look at this trading range, for the last 3 years, we've been between $10 and $20. So $10.35 is the forever low in this stock. So I'm putting a chip down here, looking at this. I'm looking at the December $10 call. It's trading about $3.75. It's $3.50 in the money. So there's 25 cents of time value. This is going to act like the underlying stock without tying up as much money. And you've got 4 months of time for things to happen with the stock. There's a big gap up above at 16. So you can see a quick little short squeeze here and see this pop up to 16 very quickly when the sentiment changes.
Okay, now just to confirm the duration here, I'm looking at your note in your newsletter, Alan. I'm seeing the October 18th.
Changed it to December.
Okay, got it. So you're going even further out.
It was only $10 more. Yeah, it was only $10 more. And when I looked at it again this morning, I'm like, that would be silly not to spend an extra $10, even if we don't use this time. I'm looking to see here, and I see smart money piling into this position, into the FireEye stock position here. So that's very bullish. Now, I think something's going to happen in here in the near term in the next couple of weeks, but using options, you want to have as much time to be right as possible. December option, again, 4 months, and a heck of a lot of things are going to happen in 4 months. Have that staying power as an added bonus, just for an extra $10 to $15. That'd be silly not to buy that.
Okay, and Alan, what was your, you said smart money there. What does that mean? How are you IDing that? Tell me what you mean.
So, you're seeing options accumulation in this stock, even though the stock is down here near its lows, and you're also seeing the fact that it made new lows, but you didn't make new highs in volatility. That's bullish divergence, meaning that the short sellers are getting tired, and you could see a squeeze at any time. That's how I look for these markets to put bottoms in. When you find dogged stocks, that's what I look for, and oftentimes you see a squeeze happen, and the market rallies back.
All right, there we go, Alan. A nice setup, because I think we're going to talk a little on the opposite side for our next block there. Maybe hear a little more cautionary tale. Alan Nuckman, though, really like to trade. Good setup here. We'll be watching FireEye. Alan is joining, of course, from Agora Financial at the SIBO, where he's the chief market strategist at Agora. All right.